So, dear colleagues, today is Tuesday, marking the beginning of a new trading week, and let's return to the market to analyze it carefully from the perspective of wave analysis. The first instrument is natural gas. As always, I meticulously analyze the higher time frame, aiming to trade effectively on the higher time frame and the lower one, ensuring that both trades align with the overall direction established by the higher time frame. Here we have a pattern forming. The first wave is an impulse, the second is a correction, the third wave is an impulse, the fourth is a correction, and the fifth wave is an impulse. So here we have what I would not exactly call a perfect downward trend, because the fourth wave went beyond the first. But overall, the structure of impulse, correction, impulse is maintained. The most important thing is that the correction should not exceed the impulse. If the correction is larger than the impulse, it is likely a trend reversal. In this context, we don't observe a perfectly clear trend as outlined in the book, yet overall it can still be effectively analyzed. If this is the completion of the fifth wave, the market may soon transition into an ABC correction. An ABC correction is generally considered to be the beginning of a trend, the end of a trend, and this is the impulse of 5 waves, followed by the ABC correction. Therefore, for natural gas, we will actively look for potential buying opportunities on a lower time frame. This represents the 4-hour time frame. On the 4-hour chart, I demonstrated yesterday on Instagram that the first wave of impulse has now formed, consisting of a total of 5 distinct subwaves. Here we have an extension. 1, 2, 3, 4, 5 extensions in the first subwave. Then we have a total of 2, 3, 4, 5. Stretching occurs only in one of the 3 possible waves. These are 1, 3, or 5. Most often this phenomenon occurs in wave 3. After the first wave finishes, we have an ABC correction in the opposite direction, which is the second wave correction. I observed that the second wave correction has tested the 38.2% Fibonacci level, suggesting a significant deep correction has occurred, and presenting an opportune moment to buy gas with a tightly placed stop loss for risk management and a high potential for profit. The deeper the market correction extends towards levels around 382 or 236, the more beneficial it is for us, as we require substantial corrections to establish a solid impulse for future movements and trends. I filled up my gas tank at this location yesterday, and my next stop is right here, so I'm essentially waiting for this upward movement. The total risk associated with my trade was clearly defined here, amounting to a potential loss of $900, which represents 1% of my overall capital. Therefore, I'm effectively adhering to my capital management rules. My total profit amounts to $4,400, and the trade ratio is 1:4. So, everyone, I highly recommend that you also focus on this specific position, not solely due to the latest news, but also because there is a clear structure on the daily chart indicating the completion of wave 5. Additionally, on the 4-hour chart, you can identify the 1-2 structure, which allows you to work on developing wave 3. Here you go. This illustrates 1 to 4 positions across 2 distinct time frames. No news events should disrupt or interfere with trading these specific setups. So gas guys, $800 in profit, and we are already starting to rise. Moving on to our next investment opportunity, we will be discussing Tesla stocks in more detail. Congratulations to everyone on the profit. I believe that many individuals have been able to make money here, as I have already noticed your messages reflecting that. I noticed that many individuals held various positions on Tesla. Essentially, that is how everything unfolded. We experienced the initial wave of impulse, followed by a corrective ABCDE triangle pattern. Here's the detailed breakout of the triangle pattern, and then of course the significant growth only began after a full 2 weeks. So again, this serves as a live example illustrating that those traders who patiently waited based on my thorough analysis and then entered trades likely made a substantial profit. It isn't the final limit. I'm still expecting Tesla to reach this area because the global target is 1618 according to Fibonacci. So there could indeed be additional potential for further growth. The risk associated with this particular trade was a stop loss of $649, which represents 0.6% of my total investment, whereas my potential profit from this trade was a significant $4,000. This clearly illustrates the substantial difference, a relatively small stop loss paired with a much larger potential profit. Consequently, if you consistently engage in such trades over the long term, maintaining a win rate of 50% on your profitable trades will be sufficient to generate earnings in the market. In reality, there's nothing complicated. You just need to follow clear positions of 1-2, 1-3 and practice for at least 2 to 3 months with 30-40 trades. Then, if 20 are losses and 20 are profits, you've already made your first money in the market without blowing your account, which is the most important. Let's move on, guys. The next instrument I would like to show you today is called Meta, which I also mentioned yesterday during my Instagram post. Look, what's the overall idea? This instrument appears very attractive because the initial impulse is developing, followed closely by a subsequent correction, then a third upward impulse, a fourth corrective phase labeled ABC, and finally a fifth strong impulse. The fifth wave is theoretically complete. After completing wave 5, we typically open the book and check for the ABC correction pattern that follows. Wave A always comprises 5 distinct subwaves, while wave B contains 1, 2, or 3 waves in total. Ideally, I expect that if the market experiences a downturn and subsequently breaks through this established channel, I will take the opportunity to sell these particular stocks at that time. From here I will sell, set a stop here, and place the first take profit here and the second take profit here. Thus, this strategic position ranging from 1 to 5 will be quite profitable for us. I've come across a significant amount of negativity and hate directed at the current meta, with news suggesting the market can either rise or fall unpredictably. I noticed that numerous traders are feeling quite anxious today because the flow of information is organized in such a way that when you read different news articles about potential market events or listen to what various experts are saying, it inevitably leads to a sense of anxiety and uncertainty about future market movements. You need to eliminate this anxiety and get rid of the news. Focus purely on wave analysis. I don't rely on any news sources at all. I don't listen to anyone's opinions. Instead, I simply analyze the charts and trade solely based on their movements. If the market presents me with a favorable opportunity to sell, I will sell right here. If the market rises today, tomorrow, or even Thursday, then I will choose not to engage in any trading activities during that time. I won't lose anything, and then my scenario will simply be cancelled. The most important thing in the market is to find a trading idea, a logic in line with the book. Wave analysis. We strategically trade based on principles outlined in the book. And once you learn to effectively form trading ideas from those concepts and apply them to the market, trading will become significantly easier for you. That is, you don't need to listen to anyone. No news can predict where the market will go. All this additional information unnecessarily clutters our minds. I personally dedicated the first 5 years of my career to trading, immersing myself in RBC channels and various analysts' insights, spending countless days absorbing their advice and unfortunately losing money along the way. I listened and lost money. That's precisely why relying solely on analysis won't yield anything beneficial. When we listen to various experts, they are all present on television to share their insights, perform and entertain, rather than provide us with valuable, unbiased information. That's the reason I will patiently wait for the right scenario to present an entry point. If it moves up, I will simply skip it. For the time being, this is my current trading plan moving forward. Let's take a closer look at the current state of the cryptocurrency market now. Guys, regarding Bitcoin on the daily time frame, the overall structure we are seeing is first impulse upward, second correction downward, third wave impulse upward, and a fourth wave correction in ABC pattern. So, looking at your wave structure, those who have trained with me already know that the first wave will likely be the longest, the third wave will be short, and the fifth will also be roughly the same as the third. And in this trend, the first wins because it was the longest. Therefore, for Bitcoin, I'm not expecting any dramatic price movements in the range of 150 to 200. I simply want to see it reach at least 130 and successfully break through this crucial level. After that, I plan to ride the breakout all the way to historical highs to take my profit during the fifth wave. We continue to hold our recent Bitcoin purchases in collaboration with our trusted colleagues from the exclusive closed channel. I truly believe that the growth we are witnessing is just beginning. We are currently only forming a breakout from the established channel, and there will likely be significant upward movement within the anticipated fifth wave. Bitcoin purchases yield a profit of $2,500. We definitely need to wait as we have held this position for about 2 weeks. In general, this daily fifth wave phenomenon can take even a month or two to fully develop. Therefore, we will need to wait right here. This represents a more comprehensive long-term scenario for the fifth wave. We are not working for 4 hours right now. On the 4-hour time frame, we are currently forming a sequence of 1 impulse followed by 2 corrections, then 3 impulses, 4 corrections, and finally 5 waves of impulse. After the fifth wave, we have an ABC correction. Here is the ABC correction. It has basically worked itself out. Since we are currently trading on a more daily time frame, I would like to hold this position until we reach the fifth wave and possibly form a clear upward pattern of 1, 2, 3, 4, 5. I currently view this as an ABC correction. Additionally, in certain instances, this ABC correction represents the first, second, or third wave, followed by waves 4 and 5. In such a structured sequence, we may continue our upward movement. Therefore, regarding Bitcoin, we will maintain our buy positions and aim to increase our profits as the market progresses. The next exciting cryptocurrency to watch this week is Ripple. Regarding Ripple, guys, Everything is basically within the trading idea that on the daily time frame we have formed 1 impulse, 2 correction, then 3 impulse, 4 correction, then a price level formed, and we began buying Ripple right at this particular point. Guys, I also want to remind you that I have a private channel where I provide market entry points, exit points, stop losses, and you can always enter the market at a reasonable price. It's better not to enter this market now, as purchasing Ripple is already unprofitable. Instead, wait for the most critical entry point at the very bottom. Then you will consistently remain profitable, and in the event of any market reversals, you will either earn money or close your positions at break-even. If you're interested in my channel, my analytics, you can message me directly on Telegram. I will provide a detailed outline of the rates for wave analysis. In theory, you should also take a look at the 4-hour chart analysis. On the 4-hour chart, this entire price structure comprises 1, 2, 3, 4, 5 waves, and this correction labeled ABC is likely indicating the first and second wave movements. Next, the sequence will progress to 3, then to 4, and finally to 5. The daily time frame will indeed reflect the 5th wave observed on the 4-hour time frame, which follows the sequence of 1 to 2, 3, 4, 5, indicating that the trend is only just beginning. Guys, I only see the start of the first and second wave on the 4-hour time frame. And here you may have felt a surge of fear that Ripple would reverse its momentum. But when you take the time to understand the inherent wave nature of the market, you'll recognize it's merely a temporary correction, not a complete downturn. The upcoming wave number 3, following the correction, will be the most interesting. It is typically the longest process and brings us the greatest amount of money over time. That's why I believe Ripple's impressive growth will continue steadily based on the well-analyzed daily model. This was likely the first and second subwave, then there will be the third, fourth, and fifth. We all know that the market consists of subwaves, and corrections will always interrupt impulse waves. The market will test your psychology. What will you do during these corrections? Exit the market, sell, and so on, making mistakes. However, if you are an experienced wave trader, you will likely choose to confidently hold on to your current buys without hesitation. Let's move on, guys. The next important instrument we will discuss is oil. For the oil market, we have a sell position open. Here we are currently working within 1 complete impulse, followed by 2 corrections, and then we will progress on the third wave aiming towards the 1618 level, adhering to the established model of 1, 2, and 3. Waiting for 3, but the market has now formed a sideways movement, and I don't know if this sideways movement is all part of the second wave correction. We need to wait for a breakout of the sideways range. As soon as the price can settle above the range, I think oil will continue to decline. So the overall scenario for selling is currently minus $140. On the 4-hour time frame, the first impulse wave is forming, followed by the second correction, ABC. The correction was around 50% according to Fibonacci. Then there was a breakout of the channel and a downward movement. This is the second correction. And for now, there seems to be some consolidation. So overall, it might be a complex type of correction. This consolidation pattern could form a triangle shape and then eventually lead to a breakout downwards. I continue to maintain my sell position, so I won't be taking any action or making changes here. Stop set above the second wave. Many traders have started placing their stops here and they are getting hit. Therefore, when you are working on the third wave, the stop is always placed above the second wave to avoid losing money during these periods. These are primarily short-term traders who are likely experiencing losses here, but medium-term traders consistently set their stop losses behind the double and simply continue to hold on to their position without panic. Then there might be significant news release and the price could decline sharply, allowing us to finally exit in a profitable position. We are currently losing money on oil. Losses are an inevitable part of trading, guys. I don't consistently experience gains. Sometimes we sit in losses. The next instrument, guys, is gold. This week, we currently have an active open buy position on gold in the trading market. Yesterday, I presented you with a detailed buy scenario in the closed trading channel, and it has already begun to show positive results. So, what's happening with gold? Gold is currently experiencing its third wave, which is notably the longest wave in this cycle. It may continue to move upward in a steady trajectory. There was also the first wave, then ABCD for the second. And this is already the continuation of the third wave, meaning our third wave is ongoing. We anticipated a market correction last week, but it turned out to be quite shallow. Nevertheless, a 4 ABC pattern formed, and overall, the gold market continues its strong upward movement. Here's a brief overview of the entry points we analyzed yesterday. So everyone, for those who tuned in to my wave analysis last week, I pointed out that we are currently in the process of forming the first wave, followed by the second and then the third wave, with the potential to also develop a fourth wave in this overall pattern. I said that we need to buy gold on the breakout of this channel. So everyone, we purchased all the gold yesterday and we are already seeing a profit of $2,300. I understand that some traders might feel uncomfortable closing a small loss, but if you're in my private channel, you could have even closed at break even here and opened buys to try to profit from this upward movement. Therefore, I can confidently say that gold has moved from the fourth wave to the fifth wave of growth. The fifth wave could still impact this area, which is approximately 500 to 1,000 points that we are able to cover effectively. That's why we can't go without stop losses right now, especially since many have started messaging me that they are holding gold for sale without stop losses. So guys, congratulations. You will likely lose money here because those who trade without stop losses in such trends usually lose their money, while we will be making profits. We understand precisely where the selling zone is located and where the buying zone exists. It is crucial for us to exit the selling zone promptly when we observe clear signals indicating that a buying opportunity is emerging for the upcoming price impulse. So regarding gold, everyone, let's hold off and wait for the news this week. Perhaps we can take advantage of the upward movement and profit from this opportunity. Sales, unfortunately, as you can see, these three waves of correction are considered a correction. Many will ask why such a short correction? Because it's the market. The financial market can experience brief price corrections, particularly if a strong upward trend is ongoing, especially in gold trading. If a significant number of people are selling gold at this time, it will naturally lead to an increase in its price, resulting in financial losses for many. However, those within our wave community are likely to have unique insights and strategies that could enable them to profit from gold investments. If you made the purchase with us based on my thorough analysis, let's proceed, everyone. Next tool, let's take a closer look at the dynamic currency market. The currency market is beginning to wake up and show some activity. For the euro-dollar pair, take a look here. The overall structure observed on the daily time frame appears to be forming the initial impulse followed by the second correction phase. Next, we had an upward movement like a consolidation, and now a breakout of the level is happening. If the price can successfully break through this crucial level, we should ideally expect to move upward in the third wave. This means an impulse may start, and the third wave will be above the euro. We began buying yesterday on the 4-hour time frame. Here we are forming the first impulse wave, then an ABC correction, the second wave. After that there was a long consolidation, but ultimately we broke out of this consolidation. Well done, everyone. I believe that soon the third wave will reach the significant target of 1618, as indicated by Fibonacci analysis. This is currently the primary target for the euro-dollar exchange rate, so we continue to hold our euro purchases, securing a profit of $690. Next, dollar franc. Guys, for dollar franc, we have open sales here, also with excellent profit. We are working within the framework of 1 impulse, 2 correction, 3 impulse, 4 correction. The third wave reached 1618, which indicates that the fifth wave will likely reach around 26.18. So I expect dollar franc to continue the fifth wave here. The currency market is beginning to show signs of activity as we approach the upcoming news, and we should consider trading to try to capitalize and earn from these movements. Guys, the next currency pair we have is the dollar Canadian, which also looks good on the 4-hour time frame. Here we have one clear impulse forming and 2 subsequent corrections. There was a deep correction here. The deeper the correction, the stronger the next impulse will be. I think the Canadian dollar will drop to this area of 161.8 soon. The market looks good here too, and we are still holding our sales. Looking at the higher time frame, we have 1, 2, 3, 4, 5 forming, followed by an ABC correction. So, theoretically speaking, a new first wave is forming and there might potentially be another downward movement in the market. That's why the currency market is predominantly in the green zone today, and we are actively trading both gold and the currency market effectively. But everything has shifted and is now beginning to move. Therefore, esteemed colleagues, I strongly recommend that everyone consider subscribing to my exclusive closed channel, where I will provide detailed insights on where to buy and where to sell effectively. Yesterday, there were multiple entry points available here. The stop loss was set at this level and the take profit target was established here. Based on the detailed analytics, if you had made a purchase, you could have executed a trade like this with a favorable 1-to-3 or even 1-to-4 risk to reward ratio. And I frequently showcase such profitable positions in my exclusive closed channel. You can reach me on Telegram or direct if interested. I will outline the rates for wave analysis. Also for beginners, I can send a book on wave analysis for free. Just message me in direct.